If you're looking for any type of motivation to do things that look impossible, this man is the man right here. Is that person that will say things and do everything in his power to bring it to pass. He does not believe in impossibility, and I currently do not believe in impossibility. Even when it does not look like it, he's going to do everything to get things done, and a lot of his clients say that about him.
Even if you do not come from a wealthy family, you can leave a legacy for you, for your children, for your family, and for generations unborn.
If one person that came into this country with $200 now has about 20 properties to his name, then what's stopping you?
One thing I'm taking away from this place is you might not come from a wealthy family, but a wealthy family can come from you.
It's truly an honor and a privilege, and I'm overwhelmed, okay, by the turnout, people that have registered, and people that showed up. I know a lot of people are still coming. You know, our people sometimes they take time, and we told them this is gonna start on time. You know, we don't have African time. We just do things, you know, on time. So while we're still waiting, we're gonna get started, okay? And I just want to appreciate everyone for coming. How many of us are excited to be here? Can I see a raise of hands, please? Thank you. My daddies are here, my mommies are here, my friends are here, my clients are here, my colleagues in the industry, professionals, mortgage, in real estate, in credit repair. I'm truly honored, and we're very excited to host this event because it's going to be special, right? It's going to be very, very special. So to get started, I'm going to invite my amazing, darling wife, Miss Carrie Ademosu, to get this event started. She put all this together, okay? She put all this together. This was not me, this was her. She did everything, so she's gonna get us started. Yes. Oh, okay, Miss Carrie Ademosu, just change the name, I know. So she's gonna be right here to do the opening remarks. So please give it up for her. She put everything together.
Hi, good morning. It's morning. I've been up very early, so I still think it's morning. Good afternoon, everyone. Thank you so much for coming. I didn't know they were going to put me on there because I just wanted to be at the best. But I think one of the things that is important for us to do is when we want to start an event is to say a word of prayer too, because nothing is possible in life pretty much without some type of higher authority, and what we believe is Jesus. And we're just going to say a word of prayer and to get this started and let God take control. You can be on your seat, you don't need to stand. Father, we thank you, Jesus, for this beautiful day. The Bible says this is the day that the Lord has made. I will rejoice and be glad in it. Thank you, gracious God, for such a time as this. Father, this is not possible without you. The Bible says that a man can receive nothing except to be given from above. Father, we thank you because of this event, because if not you, it would not be. We thank you for a time as this, and we say, God, let everything that is going to be said this morning be the way you want it to be said. Let the words of my mouth and our hearts be acceptable unto you. Let everything that we say to people, let it revolutionize lives and let it touch lives. Let people leave this place today wanting to do more and figuring out what to do. It does not even have to be real estate. It might just be something that would motivate people to get started on everything they want to do. Father, so we say this is going to be an inspirational event. It's going to be an event that would motivate people to go from where they are to where they need to be. And overall, Lord, everything we do at the end of the day will have reasons to glorify your name, because you're God and you're faithful. Thank you, gracious God, for in Jesus' name we have prayed.
Amen.
Okay, so we have a couple of speakers today, and then I'm just going to briefly introduce them. We have Miss Nikki Ojo. She has been she's one name that I hear in our household almost pretty much every day. Because when you deal with a real estate agent, there are certain things that you're just gonna hear. Miss Nikki Ojo, I know my husband would be like, if you have a problem with mortgage, there's someone that he's going to introduce people to, and she will figure it out. So for sure, you're in good hands for her to tell you what you need to get started with your mortgage today. And then Mr. Dimeji Meso, that's another name that I always hear, and he is a credit repair expert. I guess one of the issues we have, why people don't even want to think of buying a house or doing anything real estate is, can my credit even do it, or am I even qualified to buy a house in the United States? You're going to have your answers today. And then we have all the speakers that are not here, and that is Mr. Oh, they're on the next slide. Okay, sorry. Mr. Michael Akishoto is also a financial expert, and then he helps you to work on your credit. So what we're going to do is we're going to have 2 major presentations, and we're going to have a panel discussion. And then we also have Mr. Dimeji Meso, which is also a mortgage broker.
That's Mr. Daniel.
Oh, that's Mr. Daniel Meso.
Daniel Omolola.
Omolola. He made a mistake on the slide?
Yeah. I just saw it. Daniel.
Oh my goodness. We're so sorry, Mr. Daniel. Because I know Mr. Daniel is his identity theft. We'll make amends. So sorry about that, Mr. Daniel. So yes, we have Mr. Daniel is also going to give a different perspective on mortgage broker, your mortgage, and how you can get mortgage for your home or your investment property. So pretty much that's it. And then we have my husband, the most amazing man. If you're looking for any type of motivation to do things that look impossible, this man is the man right here. Is that person that will say things and do everything in his power to bring it to pass. He does not believe in impossibility, and I currently do not believe in impossibility. Even when it does not look like it, he's going to do everything to get things done. And a lot of his clients say that about him. I'm not trying to market him, but if you're trying to get a house and you need a real estate agent, honestly, I'm also a mentor, because I end up being the mentor. Most times he's on the phone, I'm like, babe, you're supposed to be selling a house, you're talking about. So he mentors people, he encourages people, even if you will not end up buying the house because of some of the things which he tries everything to make happen, this man right here is going to get it done. And I'm so grateful to God for you, and I bless God for your life, and I know that greater is in store for you in Jesus' name. So let's get started. Fasten your seatbelts. We're going to have some raffle draw, we have some gifts, air fryer, knife set, gift card, cash gift. So keep your tickets. Hopefully you win something today. And then yes, it's going to be fun. Now we're not going to do so much talking because we want to give room for questions and answers. So please, thank you so much and have a blessed event.
Thank you. Thank you, my darling wife. It's scary, I think, give it up for her. Thank you. The organizer with the most. She did everything, man. Thank you so much, baby. So, thank you, everybody, once again. In this event, we don't want to make it about ourselves, okay? It's not about me as a realtor or an investor in real estate. It's not about the mortgage broker. It's not about the credit repair. It's about you. We're going to put the power in your hands to make great, amazing decisions for you and your family to build wealth through buying properties, owning properties, and eventually our prayer is that all your investment goals will be met. So, just a little testimonial that I put together for what people say about what we have been able to help them with to make their home purchase a reality. It's just a quick video.
Prince Adebayo, thank you so much for the help, for not giving up on me, for the great service. It's been a long journey, I know. I'm so grateful. And yay, we got our key.
We live by the way, so it's someone that he really loved us. Someone, anytime we call him, he's already there. We met him as a baby, so we ended up as friends. He's someone you can really count on. He was spiritual, he was always taking us to pray that they should also just cannot do. Even when I told him that there was no Bible people, that we can start his own house. And today, that's what he does.
Amen. And another thing I want to say about prayer again was that that same place that we got a home, we thought there was no house there. We've gone there a couple of times. In fact, when we told him where we wanted, very far, an hour from where we were staying, and he said, no, let's try this place. There are homes there. The first house we got into, we just said, no, this house, we don't need to go anywhere else. And that same area where we got the house to.
Congratulations. Congratulations.
Thank you, because today we close on our yes, and we want to say thank you, Jesus. Thank you, Jesus.
Thank you, Jesus.
For this blessing.
For this
And we want to say thanks to Bible because we know that God sent you to us as a realtor, and God used him to be a blessing to us. This is a tough market, but Bible was able to pull it off by the grace of God, blessing. And we got a house for our price $1,000 and asking for it's a blessing. So Bible is a man, and we just want to just say thank you, Bible. So thanks, Bible.
Thank you.
Thanks,
I
Bible.
heard that you're a realtor with. Can you tell us a little bit about your experience with him?
Yes, my experience with him was very wonderful. When I reached out to him, he said back in July, August of last year, I really wanted to buy a house. He was super excited to hear that from me. It was challenging at the beginning and it was very encouraging. They had time where it would just send me prayers, like just to encourage you to keep going.
That who do you need to become to actually create wealth for your family? I always tell people the easiest way to do that is to find a mentor around you. Find somebody that is doing exactly what you want to do and copy what they do to create wealth for you and your family. So I want you to believe this, that even if you do not come from a wealthy family, you can leave a legacy for you, for your children, for your family, and for generations unborn. So, the Texas real estate market, right? We can all see what is going on in Texas, that the market has been hot. What does that mean and why? The reason is because of migration into Texas. A lot of people are moving in from places like California, from, New York, where they have all these taxes, state taxes and things like that, and they're buying homes in Texas. So the opportunity is there that when you own a property in Texas, Texas has the largest medical center in the world, not in America, in the world, the largest medical center. Opportunity for jobs in healthcare will never go away. That's why you see a lot of people becoming doctors, nurses, pharmacists, because the job market is here in Texas. The Houston Medical Center is the largest medical center in the world, okay? And we have the oil and gas industry on I-10. They are always employing people. IT is booming. So the reason why we encourage people to buy properties in a city like Houston, Dallas, and Austin is because you will always find people moving in, needing a place to live. So, for those that do not own their first property, we are going to talk about that. And for those that own their first properties, how to buy your second, third, fifth properties, we are going to talk about that as well, okay? Alright, this is just for some information about Houston. Home values have been increasing by nearly 17.6% to 48% within a year, okay? If you check your home value right now, it's through the roof. You can refinance that, okay? If you have a house that you bought and you've been paying down your mortgage, right? You have built up equity in the home because the home has been increasing in value, and you've also been paying down your mortgage. The difference between the value of your home now, according to appraisal, and how much you hold the bank for your mortgage, that's equity. There are mortgage professionals here today that can teach you how to take that money out from your house and maybe buy another property, start a business with that money, okay? So it's not just sitting in your house. Plan, a vacation. Your children, you can plan a fund for their college from the equity in your home. We have mortgage professionals here, and they will teach us how to do that today. Like I said before, the reason to invest in Texas is because opportunity for job growth, which has been amazing, okay? So, this brings me to a point, right? Whether you like it or not, you are going to either pay rent or you pay mortgage. 61.9% of people own their home in Texas, and there are 38% of people, which is 1/3 of people, that are renting. How many of us here are renting and plan to be homeowners? Can I see your hands up? Awesome. So today we are going to talk about how you go from being a renter to an owner, because when you are renting, essentially what you are doing is building wealth for your landlord. Your landlord will say, oh, I appreciate you pay your rent on time, or your apartment office, oh, you're such a good tenant. That's not good. That's not good. Because essentially what you're doing is you work hard from your job and then you throw the money away. You don't build equity. Your property is not appreciating in value. You are not paying down mortgage. There is no leverage. So we don't want you to live like that. We want to give you your options when you come to, okay, I don't own a home, but I dream of owning a home one day. We have professionals here and we will talk about that, okay? Right. So, the home buying basics, right? How is your financial health? There are a couple of things people have questions about when it comes to home buying. Okay, my credit is not good. We have professionals here. Oh, my income is not good. We can increase your income, okay? You can have a co-signer on a loan. You can get a second job, okay? And we can restructure even your current job to say, how can you move up the ladder to double your income? I've helped people do that. Within a year, you can double your income. When you find out what your supervisor is doing, or somebody higher than you in income, you copy what they do. If they have a certification you don't have, you get that certification. If they have experiences that you don't get, you apply for other companies and move up the ladder. You don't have to be at the bottom. So we're going to talk about that. If you have challenges concerning things like tax returns and the years you started working, whether it's W-2 or 1099, you want to have conversation early with a mortgage broker. 3 years before we bought our first home, I started talking to a mortgage broker because I didn't want to rent. Once I finished nursing school, I said, you know what? We have to get a house. Even before we finished nursing school, we started talking to mortgage professionals. So we ask questions today, okay? A lot of people also do not know that there are programs, right? How many of you think you have to have 20% down payment to buy a house? How many think 10%? You have to have at least 10% in your bank account. How many think you can buy a house with about 3 to 5%? 3% to 5%, you can own a house. On a $500,000 house, 3% is less than $20,000. On a $400,000 house, 3% is only $12,000. How many of you know you can save $12,000 in a year? Can I see your hands up, please? $12,000 in a year, exactly. So, we are not going to build wealth for our landlord and apartment owner. We are going to build wealth for us and our family. Alright. So, this brings me to the mortgage question. And Ms. Nika Ojo is going to come and talk to us because you need to know how much of a house you can easily qualify for to buy. We don't want you to buy a house and there's a lot of pressure on you because now you have to pay mortgage and then you can't stop working. Every overtime you are taking it. You can't even breathe because the mortgage is just choking you. We don't want you to do that. So we're going to bring the mortgage professional in, Ms. Nika Ojo. Everyone, please, kindly give her a round of applause as we invite her to the stage.
Good afternoon, everybody. And thank you so much for having me here. If you don't mind, please, I'm just going to make a request. If you all can please rise up. Please, if you can rise up. Please, let's give a hand to this man. Thank you so much. Thank you so much. Thank you. Please have a seat. We know putting an event like this together is not an easy task. When he called and asked if I could be here, of course, it is my honor to be here today to talk about, what I do. My name is Nika Ojo, and I'm privileged to have my husband here as well. Okay, all right. So I'm privileged to have my husband here. He's my mentor, my husband, my daddy, my everything. Mr. Araf Ojo, please rise up so you can be recognized. He actually had an appointment later on, so he's going to be leaving here shortly, but he came to support us. I've been married to Mr. Ojo for 29 years, and, well, June will be 30 years anyway. And thank you. We're blessed with 3 children, and thankfully 2 of them are also in the real estate business, so you know that when we're talking about real estate, we actually know what we're talking about. And so I've been in the business alongside with my husband for the last 20 years, and we've helped a lot of families, even people that think they cannot buy. Just like he mentioned earlier, even if you don't come from a wealthy family can come from you. We're not here to brag. We just want to show you that it is possible. If one person that came into this country with $200 now has about 20 properties to his name, then what's stopping you? It's all about your mindset. It's all about, I can do it. And we are here. For you to be here today means that you want to buy a home. It means that you want to create wealth for yourself and for your family. You know, there are a lot of things that actually stop us from buying a house. And one of it is our debt. A lot of times we buy things that we don't even need. We try to impress people that don't even like us. And we continue to get into debt. You see somebody with American Express credit card, about $40,000 for what? Buying Gucci and all of that stuff. It's not worth it at all. So today we're going to go into some of the things that you need to put in place. And sorry, before I go forward, I also want to recognize all of the other real estate professionals that are here. You know, as a Nigerian and in our Nigerian community, most of the time, we're always talking about competition. And I'm so glad that the kind of people we have now, we're not talking about competition. We're all talking about what can we do to impact our community? What can we do to work together as one? And what can we do to make sure that as Nigerians, we own a whole lot of places here in Houston. And that's why we're all here together. Thank you everybody for coming here to support Bayo on this journey. All right, so I've just talked about myself. By God's grace, you know, I've been in the business now for August will make it 20 years that I've been in the mortgage industry alongside my husband. I was once a clerk at the Harris County Tax Office. You know, when you go and buy registration stickers, I used to be one of those sitting behind the counter before I joined my husband. And we work together to build what we have right now. I always believe in the Bible verse that says, as a man thinketh, so is he. If you believe and if you think and believe that you can own a home, definitely you can do that. Okay, so you just have to get connected with the right set of people, put so many things in place so that you can own that piece of property. So when you want to buy a house, you know, the first thing is one, to have a mindset, and 2, you want to get pre-qualified. Most people, when they want to buy a house, they will go straight to a realtor. It's okay if you go to a realtor, but your realtor will actually bring you to a mortgage broker. So if you want to buy a house, the first thing that you want to do is to go to a mortgage broker and see what you qualify for. If you don't qualify, your mortgage broker would always advise you what you need to do to get qualified. There are so many things you can do. You can pay down debts, you can pay off your car, or you can sell the car. When you sell your car, you can use the money to buy your own house. So when you talk to a broker, the broker will give you a pre-approval. Now, there are 2 types. There's a pre-qualification and there's a pre-approval. A lot of times people will call me and say, oh, I spoke to this bank over the phone and they approved me for $500,000. But then once we get into the verification of every information that this particular bank has provided, they only qualify for $200,000. So be careful when you call those online lenders. You always want to work with someone local. 1, they understand you. 2, they understand your market. And 3, there may be opportunities out there that your online lenders will not tell you, that your local broker will advise you. So make sure you work with a local professional. So what are the advantages of going a home? Bayo has given us some advantages, and one of it is that the home increases in value. Lately, with the values going up in Houston, if you go under a contract, especially those that are buying brand new homes, you go under a contract today, before your home is completed, you already have about $50,000 in equity. You know, so whatever home that you have will continue to increase in value. So that's one of the reasons. And you know, a lot of people are also using the equities in their home to pay for their children's school fees. Your kids don't have to get student loans to go to college. So you can actually use the equity in your home to pay for their college tuition. You can use the equity in your home to buy additional rental properties. I know the first home we bought in 1996 was $50,000. That home, at that time, we didn't have funds for closing. We did not. My husband is here. We didn't have funds for closing. So what did we do? We increased our offer by $2,000 to cover our closing costs. And that home was a foreclosure. It was a government foreclosure. The window was broken. My husband went to Home Depot to buy the glass to put on the window. We fixed it ourselves. There was no AC in that house. No AC, we lived there. At that time, we did not have a chair to sit on. We were sitting on the, there's this fireplace at the house. That's where we sit on. That's where we sit on back there, you know. That house is paid off now. It's been paid off 3 times. Because we'll pay it off, refinance, and use that money to buy another property. So from one property, we've actually bought 3 other properties. And that property is paid off. 2 of those properties are already paid off as well. Okay? So that's the power in real estate. You just have to sit down with professionals so that they can guide you on how to make those choices and how to make those plans for yourself. Stable, yes, so if you have a home, your monthly payment never changes, okay? Well, my monthly payment doesn't change, but some people say if you pay $1,000 now, in 2 years later you're going to pay $1,500. The only thing that will change when you have a mortgage is your property tax and your insurance, okay? So your mortgage payment will never change. Your principal and interest is never going to change, but your taxes and your insurance would likely change even as you move on. Tax deduction on your interest. So the interest that you pay on your mortgage at the end of the year, you see how you receive W-2, you will also receive a form. It's called a 1098. Your lender will send that to you, and then you can use that to file your property. To file your tax returns. So many other advantages. I'm not going to waste your time because we still have other speakers here, so I'm not going to take too much of your time. But there are so many advantages to owning your own home instead of renting. If you rent, you're just making the landlord richer. I just gave you an example of how we were able to pay off 3 homes. How we were able to buy 3 homes from 1 home. And that home, the first home that we bought for $50,000, if we're going to sell that home today, that home is about $250,000. I'm just going to walk away with, maybe after all of the expenses, probably with about $240,000. I can live a good life with that, at least for the next 10 years, you know. So if we start early to buy real estate, it's going to be better for us and our generation as well. Okay. So, what are the things that we need to keep in mind when we're trying to buy a home? One, we think about down payment. So, there are so many down payment assistance programs out there. Some of them are income restricted. So, check with your local mortgage professional to see what you qualify for. Everybody's not going to qualify for the same thing. If you make too much money, you're not going to qualify for a down payment assistance program. I've heard there are some down payment assistance programs without income restrictions. I don't know about that, and that's not saying it is not available. If you can take advantage of it, you can please take advantage of it. They have loan for people that are buying in rural areas, the USDA with 0 down. If you can qualify for that program, please take advantage of it. Ask questions. That's what I'll encourage you. Ask questions from people that are in the business. Ask questions from people that are trusted so that they can guide you through the process of homeownership. Now, your down payment, if you don't qualify for a down payment assistance program, the minimum down payment is 3%, depending on the type of credits that you have. So your minimum down payment is 3% and up. You don't have to do 20% down. You don't have to do 10% down. You just need to save 3% as a down payment. There's also a program, I'm not sure, well, because of the inventories we have now, you know, those properties are not available at the moment, where your down payment is only $100. That's also available. Just check with your local professionals so that they can help you. Okay? Your credit score, that's everybody's favorite. So, what credit score do I need to have to qualify for a mortgage? Credit scores ranges from 350 to 850. The higher your credit score, the better it is for you. So, if your credit score is below 550, you're not going to be able to buy bubblegum. Okay? But if your credit score is 550 and above, you may be able to buy a home, but your down payment will be a little bit higher. For minimum down payment, your credit score the credit score requirement is 580. If you have a 580 credit score, you can do a 3.5% loan, where the investment into that mortgage is going to be 3.5. Of course, like I said, the higher your credit score, the better it is for you, the better your rate, the lower your monthly payment. Your debt to income ratio. You also want to be sure that you don't have a lot of debts. Once you start thinking about wanting to buy a home, you need to pay down on all of the debts that you have. That's going to help you a whole lot. There's a ratio that your lender will look at to see. They just want to make sure you're going to be able to make that payment. We all want to live in a very beautiful home. Somebody that's making $3,000 a month want to live in a $500,000 home. It doesn't work like that. So sit down with a local professional and let them talk to you about your income, what your debt ratio is, what it needs to be, and how you can get into a home. My suggestion is don't start thinking about buying a home when your lease is only 1 month away to expire. It takes time to get to a finish line. Start early, prepare early. When your lease is about 6 months to go, that's when you need to start. I mean, that's what I think. That's what I think you need to start talking to somebody. My lease is going to be up in August. I want to buy a home. What do I need to do? So 1, you will have enough time to save, and 2, you will have enough time to pay down debts if you really have to pay down debts. All right? And then, talk about mortgage insurance. So mortgage insurance, this is when you don't do a 20% down payment. When you have the funds to do 20% down payment, then mortgage insurance is not going to be added to your loan. But if you do the 3.5% down payment, this mortgage insurance is going to be part of your mortgage until that loan is paid off. Am I talking too fast? Sort of? Okay, we have limited time, so I don't want to take too much of the time. Okay, alright. Alright, so a couple of things to avoid when you are applying for a mortgage. The moment you know that you want to buy a house, don't change your job. Especially nurses. I know you guys make a lot of money when you go 1099. If you are planning to buy a home, please don't change from W-2 to 1099. Please. That's very, 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 it's going to disqualify you for the mortgage. If you were 1099 and you want to go into W-2, then that's okay. but don't switch from a W-2 to 1099, or don't switch from being a wage earner to self-employed. I know we make more money when you're self-employed. I know you have the convenience and all of that, but if you are planning to buy a house, don't change to self-employed just because you want to buy a house, okay? It's not that if you are self-employed, you can't buy a house. You can. The only thing is you have to be self-employed for 2 years, minimum, to qualify for a loan. And most of the time when you're self-employed, we don't want to pay taxes. About 90% of the people will not pay taxes. I've seen someone that had a gross income of 700,000, and then their net income was negative 60,000. They wrote off everything. Okay? So when you have a negative income on your on your tax returns, you're telling the government that I didn't make any money. So if somebody didn't make any money, how will they pay for their mortgage? So make sure that if you're self-employed and you are planning to buy a house, sit down with your mortgage professional before you file your taxes. Let them take a look at your tax returns first before you get it submitted to the IRS. Once it's submitted, well, unless you have to do an amendment. But then when you do that amendment, it may cost you some money that you're going to pay back to the IRS. But if you are self-employed and you want to buy, sit down with someone and let them advise you on what you need to put in place before you file those taxes. And please don't change your job when you are planning to buy a home. The other thing is, don't deposit cash into your bank account when you are planning to buy. How many of us do our job here? Some of us, do you all know what our joy is? Okay, all right. So, and I do it too. I actually have two, I do two, okay? So if you do a job, you can't deposit that job into your account because you want to buy. I know that we do that just to help ourselves, and we do that. Most people will do that because that's what they want to use as their down payment. If you are planning to use a job, you can, but that money must stay in your account for at least 60 days. Once you get your job, it's not that you get a job this month and you are closing next month. That's not going to work. So if you are doing a job, your job must sit in your account for at least 60 days before you can use that money for closing, okay? And if the money cannot sit in your account for 60 days, let's say you are so much in a hurry, you found this out that you are totally in love with, that you want to close on it, okay, talk to a mortgage professional. We have a way around it, and we can advise you. Please don't buy a car when you want to buy a house. Please don't buy a car. I had a guy that called me the other day. He was qualified for a $500,000 home, and then he said, oh, my car is giving me so much trouble. I don't want to spend money on that car. I need to buy another one. I was like, okay, is your car payment going to be the same as what you're paying now? Oh, no. Right now, I pay $500. My new car payment is going to be $1,300. If you do that, you are not going to qualify. Okay? So when you are planning to buy a home, please don't buy a car. Don't make any large purchases. And once you go under contract, don't buy a refrigerator. Even if Best Buy had it on sale for $500 instead of $1,500, please don't buy that refrigerator. Wait, sign on those loan documents, get the key to your house. Once you do that, you can turn the whole world upside down if you want. But before then, please don't make that mistake of making large purchases. It's not going to help you. Don't change bank accounts. So I know people have multiple bank accounts. Sometimes they will move money from this account to the other account. If you are planning to move money, check with your mortgage professionals first. Let them know what your plans are. Let them know what you want to do. Because the thing is, if you move money from bank A to bank B, the lender is going to ask you to provide that statement from bank A anyway, so why do you need to move it? So don't change account or don't move account all over the place. Just make sure, you know what I tell my client when they apply with us is make me your best friend for the next 45 days. Whatever it is that you want to do, let me know. If it's not going to work, I'll tell you. Because once you go under a contract or once you decide you want to buy a house, then you need to make all of your professionals your best friends. Your realtor, your mortgage broker, because we are in the business and we know what's going to come up. So we'll be able to advise you on all the things that you need to avoid and all the things that you need to do. Don't apply for new credit. When you are getting ready to buy a house, please don't apply for a new credit. Once you apply for a mortgage, just wait, get pre-approved, especially in this market that rates are going up. So if any of you have started a loan application process, and let's say about a month ago you were approved for 400,000, please go back to your mortgage person and ask them how much am I approved for now. Because even though you were approved for 400,000 a month ago, you are not qualified for that 400,000 again now. And do you know why? Rates are going up. The market that we're in right now, our rates are going up. So if they approve you for an X amount of money before, make sure you check with them right now to know that you are still eligible for that. Sorry. Okay, while we wait for the PowerPoint to come up, we can start taking questions if you have any questions. So it's not all quiet. Questions? You have a question?
Sorry, you had mentioned that if you want to buy a home, you can drop about 3 to 5%, and you would have to apply for mortgage insurance if you apply lower than 20%, right?
Okay. So if you have a 3% down payment, your loan will come with mortgage insurance. The mortgage insurance protects the lender that's going to give you a loan in case your loan goes into default. So if your down payment is between 3 and 19%, there's going to be mortgage insurance on your loan. Okay?
So I have a question to that. So my question to that is, what is the disadvantage of having a mortgage insurance? Because that is going to add to your monthly payment, right? So that's my question.
Okay, well, so the mortgage insurance really is going to add to your mortgage payment, but the mortgage insurance is to protect the lender that's going to give you the loan. If the person that's going to give you the loan, what they expect you to have, an input into the house that you're buying. But because you don't have that much money, so they want to have insurance, they want to make sure that you're going to be able to pay their mortgage, you're going to be able to pay their money back. If you don't pay their money back, then they foreclose on the house. Does that answer your question? Oh, okay. Sorry, guys. Okay, let me just answer your question.
It does in line with what she said. But if you have a higher debt for the down payment, you go to buy for you are not going to pay the mortgage insurance.
Right.
Okay.
So if you have 20%, you are not going to have mortgage insurance. Now, there are some loan programs that doesn't have mortgage insurance, okay? But your interest is going to be a little bit higher. So let's say the rate with mortgage insurance is maybe 3.25. If you don't have mortgage insurance on the loan, the rate could be 3.75. And then, like I said, just sit down with your mortgage professional. They will tell you what the monthly payment is if you have lender paid insurance. It's not that there's no mortgage insurance. There's mortgage insurance. It's just the way they added it to your loan. If you have a lender paid insurance or you have a borrower paid insurance, the borrower paid insurance is the one that you pay, that you see on your mortgage statement. The lender paid insurance is already added to your interest rate.
Got it. Thank you so much. And we are going to have question and answer session where I want everybody to please write down your question on that notepad so that when the session comes, we'll make sure we answer all questions.
Okay, so, all right, so, what are closing costs? So when you're buying a house, it's not only your down payment. That's one thing that most people believe, that the only thing that they have to deposit is their down payment. No. So you have down payment and you have closing costs. What are closing costs? The closing costs consist of your appraisal, consists of your credit report fee, your origination fee. Some of us don't charge origination. I was just talking to Mr. Daniel. He doesn't charge origination fees. I don't charge origination fees. But that's not saying some people don't charge origination fees. So that's part of your closing costs. Your insurance, your escrows, all of those constitute your closing costs. So when you are buying a house, have it at the back of your mind that you are going to pay closing costs. Your closing cost is typically between 2 to 5% of your sales price. If you want to buy a house and you want to put 3% down, just have it at the back of your mind that you're going to save at least 8%. If you save $20,000 and you only need $12,000 to close, that's even better because you have more money to spend after you close on your house. So I encourage you that once you plan to buy, save as much as you can. Save as much. Just because we are brokers, some people, when they come and apply for a loan, they have $10,000 in one account, they have $20,000 in another account. They will only show you that $10,000 statement because they think that if we see the other $20,000, we're going to charge them more. No, it doesn't work like that. So the more money you save up, the better it is for you as a client. And then the better it is for you when your loan is submitted to the bank anyway, then they know that you're really prepared. Okay? And then, these are some of the items that are considered closing costs. The recording fees, your appraisal fees, title insurance, tax service, your survey, attorneys. There are so many people that are involved when you are buying a house. It's not only your realtor, it's not only your mortgage broker that works on your file when you are buying a house. There are so many people that work behind the scene that you may not see, but you will see their service, and at closing you will see all of their bills on the closing, on your closing statement. So those are the things that are considered closing costs. Is there a way to avoid paying closing costs? You can talk to your real estate professional. He will also advise you. Like I gave you an example earlier with us, when we initially wanted to buy our first home, we didn't have money for our closing costs. So what we did was to add that on top of our offer. So instead of buying the house for $50,000, we ended up buying that house for $52,000, so that the $2,000, the seller will now add that to our closing. So that was how we were able to avoid paying, well, not avoid paying, at least reduce the amount of money that we brought to closing. The other option is you can get a higher rate to get a rebate. So let's say the rate today is 3.25 and you don't have money to close. You have your down payment, you don't have money to close. Well, you can get 4.75 and get all of your closing costs taken care of by your lender. So it's totally up to you. Either you save up on your closing costs or you add that added to your monthly payment. And like I said, whatever option that you decide to go with, just make sure you are talking to your professional representative. When we are buying, a lot of times, we hear so many things from friends and families and people that don't even want you to buy that house. They will advise you. Trust your professional. There's a reason why you went to them in the first place. These fingers are not equal. Every file is different. That particular client is not going to tell you exactly what went wrong during the process of their loan. They will only tell you a little bit of it. So just trust who you are working with and trust that they will tell you the right thing, okay? So whatever you've heard from somebody out there, you can always validate that with your professionals when you are in the process, okay? Yeah, so we'll talk about that. Okay, so why do you need to work with a local professional? Number one, we have to be licensed. So all of us professionals here, we are licensed to do what we do, okay? And we cannot play with our license because that's our source of livelihood, all right? And home buying is it's an overwhelming process. It is truly overwhelming. But when you hire someone that is knowledgeable, someone that's got experience, they will hold your hands and walk you through the process. It makes the process a lot easier. I've worked with Bayo on a couple of clients, and I know his heart is pure. He wants all of his clients to be successful. We all want our clients to be successful because at the end of the day, if we do a good job to you as a client, you always refer us to your friends and families. So refer your friends and families to your real estate professionals. We help you to review your contract. For example, I tell people, if you are a nurse and I come to you, I don't know how to translate prescriptions. So you being a nurse, you don't know how to read loan estimate. You don't know how to read closing disclosures. You don't even know how to read all of these disclosures because, trust me, we're going to send you a whole lot of paperwork to sign. So you need someone that's been in the business that would advise you, this is the reason you're getting this type of document. This is the reason you need to sign this type of document. And if you have questions, they are always there. When you work with a local person compared to an online person, we work from start to finish. We're not going to just leave you on the side. Most times, people call us till about 9, 10 o'clock, even on Saturdays. We're here today on a Saturday. This is the time we could be spending with our family or doing something else, but we're here because we want to invest in you, because we want you to own that piece of home, the piece of property that you are dreaming of. So when you work with a licensed professional, trust me, you are in a very good hand. We are well experienced. Sorry. Okay, we have the experience, and then we can also, as a mortgage broker, we can also shop around for you. So instead of you as a client going to Chase, Bank of America, West Fargo City, we as mortgage brokers, we have relationship with wholesale lenders that with one credit pool, because if you go to Chase, Bank of America, West Fargo, whoever, each time you go to these people, each of them will pull your credit. And if you don't fit into their box, you're not going to get a loan. But when you work with a local broker, they pull your credit one time. With that one credit, they can shop with 10 different lenders to see who's going to give you a better deal. And when they pull your credit, they will be able to tell you if you qualify for a mortgage or if you don't qualify. And if you don't qualify, what do you need to do to qualify for a mortgage? So that's one of the benefits of working with an experienced professional. Okay, and then we act as middleman with all parties. So when we are buying a house, you know, we work with title company, we work with the lender, the investor, your real estate professional. Your broker acts as middleman between all these parties just to make sure that everything goes smoothly. I think we can do that. Yeah. Later. Okay. All right. Thank you so much, everybody, for
All right, so just a quick, everyone, people coming in, I appreciate you, thank you all. We have tea, coffee in the back, we have water, we have some cookies. We're going to have lunch as well that people are going to take to go. So right now is raffle draw. We have gifts for people that came today, and my amazing wife here will handle the raffle draw, so we can win our first gift. Hopefully you will be the lucky. Who is ready to win something? All right, let's go for it. Thank you all so much. Can you please give a round of applause to the organizer again, my wife? Thank you. So the next presenter we have is going to be Mr. Dimeji, and he's going to be talking about credit repair, okay? Because we realize that a lot of people during the home buying process, their credit seems to be the stumbling block. So we say we have to find a solution to that in our community. We have to help people fix their credit, and then so they can build wealth. Because I always say this, credit is huge in America, okay? How many of you believe credit is huge in America to have a good credit? This is Mr. Frederick here. He's in the auto industry. He knows the interest rate people with bad credit are paying. They are paying substantial interest rates, which, you know, at the end of the day, that is money you can save in your pocket. So rather than you paying substantial interest rate to whoever is charging you, fix your credit. That's the beautiful thing of credit. It can be repaired, it can be restored, it can be rebuilt. And we're going to show you how and teach you how. And then, I didn't tell them this, but they have to give away credit repair services, okay? You have to give away credit, please. We have amazing people here. We have people that, and Mr. Michael too, you two are here. You're a credit repair expert. We're going to give away credit repair services to one lucky winner. One from you and one from you. And I'm sorry I didn't tell you this early on, but we have to help people. Please give it up for Mr. Dimeji and talk to you.
Thank you so much. My name is Dimeji, as you said already. I reside in Dallas. I came with my family. We are starting people that are for the community, you know. We came as immigrants. Let me start with my story. When I first came to this country, like 2 years back, I was at home, receiving mails, different kind of mails. Opened the mails, I saw a credit card, 5,000, 3,000, 10,000, and I don't know anything about it. So I had to open it, started spending it. Spending the money, go to Macy's every Sunday, spend the money anyhow. So after like a month or 2 months, I started receiving statements. What's all this? What's the meaning of all this statement? Like you have to pay a balance of 3,000, balance of 4,000. I was confused. So I talked to somebody, like you hold already. Like, what's that mean? Like you have to debt to pay. Debt to pay is free. They said America, when you're in America, you can find money on the street. That's what I thought. You understand? So I summoned courage, started paying all those debts. In the course of paying the debts, I lost my job. Things were so bad, like I could not continue the payment. My credit went from 7 to 400. So everything was like, go astray. What can I do? Let me forget these people and face my life. So I had a lot of collections on my report. So I was like, I can't continue like this. I have to do something about it. So I contacted somebody in Chicago. The guy was like, hey, he's going to help me. He's African American, he's going to help me to fix it. And I said, okay, how much is going to collect? 2,500. So, okay, no problem. So I done a payment. I said, one time payment, 2,500. That's a lot. Well, it's when I have a problem, I need a solution to it. So I paid the money, I give the guy the money. After I paid the guy, like a week or so, no communication. No communication, no contact with the guy. So I was going through all those problems for a while until I met another guy again, and he helped me with the credit. And okay, after he helped me, I was like, okay, can you train me how to do this stuff? Because okay, if you can pay so amount, and I paid. He trained me. So I was using my credit as a case study to solve the problem. Because in the process, I look at it like, if I have a problem as a person, that means millions of people have the same problem. So that means if I'm able to solve my problem, I can solve other people's problem. So my friends, my cousin, they had a credit issue or whatever, so they came to me, and I had to help them fix the problem. So the process people started calling to me, come and help us. This thing I can turn into business. You know, I can be helping people out for that inside the door. I can be doing it. So to God be the glory. So I've been doing it for like more than 7 years. It's not a stigma. Having a market, it's not a stigma. But there I was like, if you talk to people like, oh, no, mechanics is good. But if you move closer to them, they have a market. But it's a determinant of your future in this country where we are.
Yes.
Where we came from is a cash economy. I'm from Nigeria. We don't do credit. We move with cash. You are buying a car, you pay cash. You are buying this car, you pay cash. But here's the credit. And it's determined by 3-digit number. From 350 to 850. If you have a good credit, sky's the limit. You can take your family from poverty to the next level of your life. Those 3 numbers, if you know how to use it well, it will be good. So that's how I started the journey of credit. Thank you, Mr. Bayede. Thank you for the co-presenters. And thank you, nice people of Easton. I think I need to move it. People are so lovely. So, your credit report has three major credit bureaus. We have Experian, Equifax, TransUnion. We have other ones, but these are the most important ones. And we have Lexis. We have different kind of ones. This one is mostly used by the lender to decide their business. And it is compile all your payment history, your public record, personal information inquiries. And this information are used for business decisions. Whenever they want to do something, they put either they put Equifax, Experian, or TransUnion. At times they put all the three. So it's very important. And I won't take much of our time because of our question and answer stuff. I'll be going faster. Please bear with me on that. This is what will be on your credit report. Your personal name, personal information. If you look at your credit report, make sure that you have only one name. There's some credit report, you open it, you have to find it. Benson Ajayi Tayo. Benson Tayo. You are confusing your client. And under the law, it's supposed to be one name. If you set it like that, you can talk to your credit expert like to remove it, make sure that you only have one name. And then under the public record, you have a collections, bankruptcy, repossession, foreclosures. Collection is very common among us, but there's a solution for everything. Collection is there's a solution for everything. Because at times the collection people will call you, they will harass you. But if you point to the harassment, you are ready for a job. And they said that what they are doing, what they are paying is they pay a lot for pets. Under the collections, I would advise people, if collection people call you, whether you pick their phone or not. If you are ready to pay their calls, make sure you have the money to pay them. If you have the money to pay them, make sure you make an agreement with them that if I pay this money, are you people going to remove it from the report? If they say yes, put it in writing. You can send email or send an email. But if you are not doing that, that means you are doing the paid collections. It will be a report. And whoever is going to lend you money, when they see you are, this is paid collection, that means this person will be an attested. You understand? Like, because before they put something on collection, it's like 120 days late from charge off to collections. So, but if you want it to be removed, talk to experts. They can walk around it and get it for your report. Also, the credit information, you have your credit limit, the date the account was open, your payment history. Payment history is very important. You must have a good payment history. If I go to a lot of stuff, like you don't have money to pay your monthly due or anything on your balance, maybe you have a balance of 1,000 and they ask you to pay like $40. But as a monthly due, but you don't have $40, call your creditor. Let them know that you are going through some things that you can't pay right now, but they can put you some extent, like they have a different kind of product. why not? We go through a lot of financial issues all over the world. But talk to them, and they will look into that. And also, your credit limit is 30%, which is more moderate. Anything, if you are spending more than 30% on your credit limit, it will affect your credit. Your scores will go down. Make sure everything is under 30%. If you can be like 10%, that would be good. We have your credit utilization. And also, it's good to have different kind of credit card. Some people are like, hey, no, I don't want to have much credit card. It's help you. You should help your utilization. If you are spending money like maybe after 10,000, 5,000 on different kind of card, if you spend 10,000 on this card, or you have 20,000 on this card, it won't affect your credit much because you have a good credit utilization. So that's it. And credit inquiries. We have a sub pool and an up pool. Sub pool is when, I don't know if anybody knows about Credit Karma here. Credit Karma, you check your report. You can check it 100 times in a day. You show your report, you show everything. But they are doing the sub pool, not the hard pool. But the hard pool is when you apply for credit or you apply for a loan, personal loan, business loan, whatever. They will do the hard pool, they will give you, they will show on your report. You will remove 10% or 5% or 3%. You understand? But I will advise people, before you do anything up on your car, on everything, anytime you are doing a statement, what you are paying is too little. We save you money. In the long run, we save you money on your home loan, on your credit card, and also on auto, personal, and other loans. There are some people, I have a friend, like, his credit limit on his card is like, all his card, up to $500,000. Before he has a good credit, he maintains it. Not that he doesn't spend it, he spends the credit. And there's a way of doing it, like a statement. You have a due date and a statement date. There's a difference between those dates. Due date is where they alert you that your credit will be due on social date. Let's say it's on the 10th of each month. Your statement date is on the 15th. But on the 10th day, you have the money. You are not sure of getting money to pay that bill. Or you have money, but you are using money for business. You can hold on to statement date. Because on that statement date, they report to the credit bureaus. You can use that money on that day, they don't care about it. Make sure you pay that money on 14th. They report on 15th. After they report on 15th, they will send an email or they will alert you. Your statement is ready. After they show that statement, you can start spending the money. So on your balance will show 0. That you don't owe the credit card. I think you understand what I mean. Let's assume that you have $10,000 balance on the credit card, but you want to be reporting 0 as your balance, and you want to use that $10,000. $2,000, $10,000. Yeah. You understand? Yeah. So you make sure you pay that $10,000 on the 14th. So on the 15th, they will report to the credit bureau and they will send the email that your statement is ready. When they show the statement, it will show 0 balance. That you have paid their debt. On that 15th, once they show that statement, you can start spending that $10,000 until the next month. So it won't have any choke on you. And your balance will be 0 or 2. So how to improve your score? Always pay on time. I also pay down the existing debt. There are some people, they came to me like, hey, they want to fix their credit, they have a lot of issue, whatever. How much is going to cost me to do it? It's not about money. Let me see your report, maybe just advice. There are some people, they have high debt rate, high balance. So like, okay, Mr. go and pay this down, pay this down, pay this down. After like a month, come back to me and see what will happen. But once you pay down your debt, your cost will go up. That's the logic. Also diversify your credit by having a credit card Instrumental loan, revolving loan. Credit card is a revolving loan. Instrumental is like your car loan, like a personal loan. So it's good to diversify. Whenever you want to buy a house, like Nick said, want to buy a house, you have to be out, they will check everything. They will know that you are not only based on credit card, you are on instrumental, and you are responsible. You manage your debt very well. Also, check for error on your report. There must be some errors. Somebody may have used your credit somewhere, or somebody may have added your name somewhere. I've seen a client on his report. You have different names. It's a good guy. But when he opened his report, he just find John McKinsey, which is different. And that will cause a lot of problem for him. So we have to work around it. So check your report and keep your own account. Because some people, it's not our fault, because where we came from, we don't use all this credit stuff. Maybe they hold a credit card, and they pay the credit card. After they pay the credit card, they're like, I've already closed my card. I don't want that problem, I don't want them to call me again. I said, why? You don't know how to close it. You hold $2,000 and you pay already. Fine, leave it there. Don't close it. Use the card once in every 3 months. Go out there, spend $100 and pay back. It will be there. It will give you age. It will give age to your credit, and it will put your credit utilization. So you don't need to close anything. Leave it. And make sure you spend it within 3 months. Because if you don't spend it within 3 months, they will close it. That you are not using it. And if you are not using it, you are not giving them money. I think you understand what I'm saying. Yeah. Also, be patient with your credit. Credit may be bad, may be like fed up, like, how am I going to get out of this? No, just be patient. And be patient with whoever that's helping to do it. Because some people have issues with their credit more than 3 or 4 or 5 years. But once they give it to a repairer, they want you to be faced with 30 days. It's not a miracle worker, you know. You have to give the person a time, peace of mind. When they have a peace of mind, and think of solutions. There's a way around everything. So you have to be patient with yourself and everything. Also, what are your credit rights? You are allowed to have an annual report of your credit every year. Just go to that website, annualcreditreport.com, every year for each bureau. You have Experian, TransUnion, Equifax, just go there, they will give it to you free of charge, any cost. Don't do that. Yeah, that's my company name, Dime Group. We help people for financial consulting and reporting view, helping our community. And if you want to visit us, you can visit on the website there. I reside in Dallas, as I said, and this is my good brother. And I thank you for being here. Mr. Bayo, thank you so much for your time and everything.
Can we give it up for Mr. Dimitri? Can we give it up for him? Thank you so much. He's here with his family, his wife, and the kids. They came from Dallas last night, so thank you so much, sir. I actually met Mr. Dimitri through Mr. Jide. Mr. Jide, you know I met him through you.
Yeah.
This is my amazing client is buying a mansion. I will tell you where it is. So, and we had some challenges, you know, little thing with this, the mortgage lenders were acting. I said, I give them sense. I said, this person making this much, to fix their credit is not a big deal. Please, get us on the contract. Before we close, we'll fix the credit. It's not a big deal. They say, oh, but the management. I said, management are human beings. Talk to them. Look at the income. And then we started working, we're working with Mr. Dimeji. We got on the contract. We're heading to closing next month. So that's how I met Mr. Dimeji. So thank you so much, Mr. Dimeji, for that work. It's been amazing.
Loan to value is basically the amount of loan that you are borrowing compared to the value of the house that you're buying. So when you buy the house, it has a value. You put down the down payment, and the down payment minus the value is now your loan amount. It now brings it to loan to value. So if you have a 97% loan to value, you put down 3% down payment. If you put down 5%, is 95% loan to value. And if you put down 20%, is 80% loan to value ratio.
Got it.
Thank you, sir. And also mortgage interest rate, fixed or adjustable, which one is better?
So that's kind of interesting because this actually came up yesterday. A client wanted to buy a house, and my first question was, because it was a young couple, they were 25 years old. So my first question was, how long do you intend to live in that house? So the guy said, oh, I'm going to be in that house for like 3 years. So I'm like, okay, I usually don't do this, but since you're telling me you're going to be in the house for 3 years, it's better you go on an adjustable loan to make your mortgage payments lower. But generally, fixed interest rate is the best. 30-year fixed, meaning your rates will be fixed for the rest of the loan. And of course, if rates do drop, you have the opportunity to refinance the loan into the lower rate.
Got it. Thank you, sir. And last question here is, what if you have a separate account different from your bank account statement that you have provided to use to close the account, and you use the second account to buy cars, furniture, etc.? Is there any issue with it?
So you have two accounts. You gave us one account that you want to use for your transaction. And I'm assuming you did not give us a second bank account. Yes, as long as you didn't give us the second bank account, you can't question it. And as a former underwriter, what we do, we question anything we see. So what we don't see, we won't question. The only reason we will question is if we see the large deposit coming in from somewhere, and we will question, hey, where is this large deposit coming from? That will be the only reason we will ask you for additional documentation regarding your asset.
All right, thank you so much, Mr. Danny. I appreciate you. We have a question here by one of my sisters right here, and she says, you said keep old accounts for, what about, okay, you said keep old accounts for age. What about APRS? I have a problem paying the APRS for cards. I'm really not, okay, this is going to be for credit, right? Okay, we will talk about credit. Importance of LTV, and what is the importance of loan to value, Mr. Daniel?
What is the importance of it? So the main thing about LTV is that if you're trying to drop mortgage insurance on your loan, the best way to do it is to put down 20% so your mortgage insurance can drop.
Got it. Okay, awesome. Do you have a real estate question, right?
Yes.
Please go ahead.
My question is, as the market, the way we know it now, the prices are over.
Sure.
Okay. The question is it worth it to buy a house that is, let's say I'm trying to buy a house and the price is $240, and the owner want me to pay $270. So when the appraisal come back, the value of the price of the house will be like $235 or something like that. Below that, is it worth it for me to pay $20,000 more?
So so the question is it worth it if I pay more than what the house is worth, right?
Yes, more than what the appraisal price.
Right. So the contract price is $240.
Yes.
And the appraisal value comes in at $200.
Yes.
Okay. Now we just started seeing that recently in Texas. I mean, within the last 2 years, right? When California people started coming to invade us, and they were overpricing their houses. So for me, I don't encourage anybody to do that, going into your home upside down. But the market, it is what it is right now. There's nothing you can do about it. So if you have the funds to do that, I will encourage you to do that because the price is not coming down anytime soon. It is what it is and it's here to stay. And we just have to get used to it. So if you do have the funds, go ahead and do it. And of course, it's still better than you renting a house because now you are reinvesting into yourself. So once again, if you have the money to pay, go ahead and pay.
It's 1,000 square feet, so.
Like I said, the market is here to stay like this. It's not going to change. That's just the sad reality. Look at New York, look at California. That's how they started, and it remains like that. So you just have to look at it as an investment.
Thank you.
I have a question. My question is, you talked about refinancing a home and pulling money out. Can you explain how that works? And also, when you do that, how long after do you purchase another house?
Okay, so the question is getting money out of your house and how long can you wait to buy another house, right? So the first one, pulling money out of your house. Every state in the US has different state laws when it comes to what we call cash out, home equity loan. Texas is very strict, and I believe it's the strictest in the US. They cap your loan amount that you can get out of your house at 80%. So, if your house is worth $100,000, the max you can get out is $80,000. So, if you owe $60,000 on the house, the max you can get out, if you want to do a cash out refi, is $20,000, meaning it's capped at $80,000. And you can use that money to do whatever you want to do. And as far as purchase is concerned, you can, if you're qualified and you have the income and the resources, you can buy as many houses as you want. There's no time frame. But the restriction is on FHA loans. You can't have two FHA loans at the same time.
Okay, so in my situation, I have a house in New Jersey, and I want to purchase here.
So that's the exception now to the FHA distance. And you must be able to justify why you want to get another FHA loan. So if it's because of relocation, I've done one where the guy was in Maryland and he was moving over here. So we asked for documentation. One of the reasons, hey, relocation, and the family got bigger. So we got an exception for that.
Thank you so much, Mr. Daniel. We have a question here. What is the implication of jobs that are not disclosed on your mortgage application?
What is the implications of jobs that are not disclosed in your mortgage application? So, one of the implications might be if you don't qualify with your income that you disclose to us on your primary job. But there's really not much. I mean, you won't get in trouble for not telling us. We'll just ask you to bring us documentation for your other job that will qualify you for the loan. So you're not going to get arrested for not telling me you have a job.
Got it. Okay. Awesome. Does that answer your question? Awesome. Yeah. During refinancing, is there a credit pool?
Yes. We always have to pull anything to do with a mortgage transaction. We always have to pull your credit to see whether you're going to qualify and whether we're going to proceed with the transaction or not.
Got it. Will the interest rate change? Like the rate, will it decrease?
Will the interest rate change? Yeah. Well, I'm trying to answer that question. Is it? Who asked that question so I know what they're referring to? Yeah, can you be more specific?
Like when you buy a house and maybe presently your interest rate is like 3.7, and then maybe after a year you refinance. So with that 3% decrease,
so
go with the market.
If you got a loan and it's a fixed, just say a 30-year fix, that rate will remain like that for 30 years. When the rate goes to -1, you will not go. If rate goes to 10%, it will not adjust. It will remain like that for the rest of the life of the loan. But if the rates do decrease and you choose to do that, you can always refinance it. Like last year and 2 years and a year before, a lot of people refinanced because the rates were very low. But I would never recommend you refinance it to a higher rate.
Got it. Okay, thank you, sir. Does the interest rate remain to the life of the loan, or does it fall off once 20% of the home? Okay, does mortgage insurance remain effective through the life of the loan, or does it fall off once 20% of the value of the home is paid?
Okay, so that's two things. So on FHA, mortgage insurance premium is for the life of the loan. Even if your loan to value is now at 1%, it's for the life of the loan. On conventional loans, it falls off at 20, but it is your duty to contact the lender to let them know, hey, can you check if my value is now 20%, if my equity is not 20%, so my mortgage insurance can fall off. A lot of people have been doing that recently, like the last 2 years, a lot of people on a conventional loan, they've been calling the lenders, hey, the value went up drastically, can you check my value? That one, you don't have to do a refi. They'll automatically do it in their system. So if the system comes out and say, hey, the value's there, they will let the mortgage insurance fall.
Got it. Thank you, sir. Does that answer your question?
Yes, it does.
Thank you. How long can you wait to buy another house if you have an FHA loan now?
If you have a current loan is FHA, you can always buy a conventional loan as an investment.
Immediately?
Yes, there's no time frame.
How much is down payment?
Conventional investment loan, we have lenders that are doing 10% right now. 15%.
15.
For investment loans, yes.
What about second home?
You can buy second homes with 10% down, as long as your income carries 2 loans.
Got it. So you can buy immediately with 10% down as long as your income carries 2 loans or your investment with about 15 to 20%.
And when we say second home, right? It's not like you can buy 2 homes within Houston. Some lenders look at it, why are you buying a second home within Houston? So you have a primary residence, you have a second home. Your second home is usually out of town, like, oh, this is where I go for the weekend. Then you have investment. So I've seen some people trying to buy a second home.
So for a second home, what is the distance?
It depends on the lender. It depends on the lender.
So what can you give us to, like, okay, we are coming to you now, boom, we want to buy a second home. How far away from our primary residence do we need to be to buy the second home?
I will use the 60-mile radius yardstick.
60 mile. So if you have a first home maybe in Katy, Richmond, for example, you shoot out 60 mile maybe towards the Woodlands, towards Galveston, towards Dallas, Austin, San Antonio, anywhere, and it can qualify for a second home. But I've also seen people that didn't do 60 mile and they were able to buy. How did you do that?
There's different scenarios. Like just say for instance now, you live in Houston and your primary residence is in Katy. You work in downtown. The distance between Katy and downtown is like 40 miles, right? So now you see something in downtown that's close to your job. That could be considered a second home because of the distance. So there has to be a reason. But your job, your primary residence, cannot be close that to your house, and you want to buy a second home. You understand what I'm saying?
Right. Got it. Because this session is very, very important. Because here in the midst, we have people that own their primary residence already. And they are thinking, okay, I've seen people buy 2, 3, 4, 5 properties. How are they doing that? So Mr. Daniel, what can you tell us right now? If you own your primary residence and you plan to buy rental properties, put tenant in, do Airbnb, I mean, you've been seeing how money Airbnb is making. Honestly, we have an Airbnb right now. My wife manages it. We are booked out for 2 months. I'm telling you, and I'm not using this to I'm telling you, I want you to go and get a house in downtown, in Midtown, in Heights, by the medical center, by, what's it called, Galleria, and use it for Airbnb. If it's allowed, HOA, you have to check. If HOA permits you to use the house, if the deed restriction permits you, please get it. But it's a lot of work, okay? You're gonna manage people. You have to be customer service. But imagine people staying there paying you $300 a night, $250 a night. You know what I'm saying? That's some cash in your pocket. So if you can, please. So this is very important. If people own their primary residences, what mortgage options can you give us right now? Starting from Monday morning, okay? Because we all have money saved somewhere, 401k, IRA, all these retirement accounts that give you 1% or 2%. Real estate give you 10, 15, 20, 30%. I have a guy in Dallas, they bought a house for $750K, okay, in 2015. Guess how much they sold the house this year? $2 million. How did you know? You saw it on my status? To God be the glory. They sold the house for $2 million in Dallas. Guess what this guy did? He quit his job. He said he wants to think about his life. He said, let me go and think about my life. Let me know what I'm going to do with this money. Because once you are working, you can't think too much. But work is every day. So you have to take a step back from work and think for the future. But anyway, yes, sir.
He's going to leave after starting their own.
They moved to he told his wife, he said, take 100K in your account. The best way to impress a woman is to give her money. How many people agree? He said, my wife, take $100,000, put it in your account. Just let him breathe. He still had 1.9 million left. He said, take 100K, just cool down, let me think. Then he went to think, but anyway, I don't need to distract us. What am I trying to say is, from Monday morning, Mr. Daniel, people that own their primary residences, they want to buy investment properties. They want to buy second home. What should they do right away? What mortgage options are available to them from Monday morning?
So, from Monday morning, so the first thing I would say, alright, if you have your primary residence, you can always buy another one, just say you want to upgrade. You can convert your primary residence into a rental if you are upgrading. You can always downgrade, right? But the lenders frown on that because typically nobody downgrades. Everybody always upgrades. So, like I said, you can always buy another house if your family got bigger and convert your primary residence into rental. Or you start looking for investment properties to buy, and you have to put down 15%.
People don't want to put down 15 or 20%. People want to put down 3 to 5%. Anybody here that want to put down 3.5 to 5% on an investment? Cool. So, what Mr. Daniel is saying is, if you own a primary residence, you can rent it out. And buy. Is there a distance requirement?
No. I want us to be clear.
Okay.
If you have your primary residence, you can always buy if you're upgrading and convert your primary into a rental. You can't just say, oh, I want to buy another property and you're not going to live there. And
right. You don't want to swap the government. They can catch you. Okay. And also, is there a distance requirement for that?
No. When it comes to investment, you can buy the next door neighbor's house and convert it to investment. I'll be honest, in Richmond there's a Nigerian guy, I think that road belongs, they should name it after him. He owns all the house. I think like 5 houses in that road.
Wow, Mr. you didn't tell me that.
This was last year now, before he went to
I mean, we can tap into his anointing. Whatever he did to own 5 houses on the street.
There's no distance requirement for investment.
Got it.
Yeah, and that piggyback, just to piggyback off that, are you ever able to say investment? Because I'm understanding you to say the credit reports here are upgrading or downgrading, but you do know that it's an investment. So are you ever able to disclose that you're trying to...
Sure.
Yeah.
When you come to us and say, hey, you're going to buy the house, we'll ask you, is that going to be a primary residence? Is that going to be a second home? Is that going to be an investment?
Okay, thank you.
So we always disclosed to the lender.
Okay, great. Thank you so much. And I know Ms. Nikki wanted to say something too, right?
Yeah, what I wanted to add is, So what I wanted to add is, everybody want to live in a very good home. We all want to. But if you have the mindset of having multiple rental properties, start small. You can always buy up. Your first home could be 200,000. A year later or 2 years later, you can move to a home of 280 and you do 5% down. Then later, you move there. You're not going to do 5% and then don't move there. Okay? Then, maybe 3 years later, you save more money and then you move up to another house. That's the much easier and economical way to buy multiple properties. But if you buy a home of 600,000 now because you want to impress somebody, and then tomorrow you want to get an investment property, you will have to do 20%. 15% down. I don't know how 15%.
No, you don't have.
15? Oh, okay.
One person.
We have questions. Can I ask a question? I'm loving this. Guys, please keep the questions coming.
Yeah, please. Honestly, keep the questions coming, please.
So my question is, what's the fundamental difference between investment, property, and I know what they mean, but what's the major difference between two of them, and which one do you advise want to go first? Like, must you have your own home before you do investment, or you can go either way?
So, if you're a tenant and you live in an apartment and you're renting anywhere, you can always buy an investment property. The lender will just calculate your primary rent as a part of the debt-income ratio. So there's no rule against you having your own house first before owning an investment
terms of requirement.
Between investment and which one?
And the personal.
The owner occupant, you, the one that lives in that house, that's your primary residence, that's your homestead, that's where you live. An investment.
Declaring incomes and all that versus rental expenses and the rest of the
When you say taxation, how do you report your rental income to the IRS?
Yes.
Right, you report whatever you're receiving from your tenant.
Is that before expenses or after?
No, when you do your taxes, so you're not talking about tax laws now, but when you do your taxes, there are lines where you report your total gross and your expenses on the return.
So that based falls directly on taxes and
Exactly.
Okay.
Exactly.
All right, thank you very much. We also have a question in the front here. Are we having a great time, everybody? Thank you. Hold on.
Yes, I don't know if someone had asked this question already, but my question is there an interest rate different for an investment property?
Is the interest rate different for, yes, it is. For primary residents, since the rates have generally went up this year, and we have seen a big difference on the second homes and investment properties. So primary residents might get you 3.5, and investment property might get you 4.3.
Thank you.
Yeah, what's the actual total?
Just something else I want to add generally. So if you are planning to buy investment properties, make sure you report that on your tax returns. Because some people will have investment properties, they'll receive the income, they don't report to the IRS. You are doing yourself a disservice if you do that. So you make sure if you receive rent, report it on your tax return. And don't report it on Schedule C. Please talk to your accountant. Report it on Schedule E so you can get credit, you know, when you are applying for another investment property. That's one mistake that I see a lot of people making. They wouldn't report their income. They wouldn't report the rental income, and then they will expect to get credit for that when they apply for another loan.
Are there taxes on rent? Of course, IRS wants their money.
I guess I have a question. So if you're using your primary residence for, I guess, an Airbnb short-term rental, do you have to report the income to the IRS? This is your primary residence.
No, so actually I've seen that you have to. But anything to do with taxes, I'm not a tax professional. I only do mortgages. So we have to talk to a tax professional about that.
Got it. And also, this is the first event in the future. Whenever we're having this, I plan to bring in professionals, tax, inspectors, appraisals, so that we can answer more questions, okay? And, we will take it to the next level for the next event. But any other questions? Okay.
So my last question is, imagine that you already got your pre-approval and you're ready to go. Okay, and then the bank send you the fees, details.
Loan estimate.
Yes.
At the beginning.
Yes, so you have tax service, credit report fee, appraisal fee, attorney fee, lender's fee, all that. So what can you take off from all this? Like, you don't want to pay. You don't want to pay.
So the question is regarding closing costs.
Yes.
What fees?
Where's that?
Where is it? So what fees can you remove from the closing costs? I don't want to pay credit report. I don't want to pay tax fee. Well, unfortunately, there's no fee that you remove because these are individuals that are working for your services and they're earning. So I'm not seeing anything removed. But sometimes as mortgage brokers, we have the ability to remove your credit report. Sometimes I do that. I do free credit report for my customers. Don't give me a hard time. Right, but those are not our fees. We can't control third-party fees like the title company fees, the survey fee, the appraisal fee, the other fees. Any other fee that's involved, we don't control it. It's a third-party fee that's totally out of our hands.
Did you say your credit report fee was 150? Yes. How many people on the application?
It was the loan estimate. They sent out the loan estimate, and I did that sometimes.
Yeah.
Then they adjust. No, it's not 2 months. But I don't know what that person did. But credit report fee is usually less than that for one person. It should not be more than I put your credit report 2 times, it might be like $80 or $90. If I put it 3 times, it goes up each time. And this is not money that comes to me. It goes to the credit card, the credit agency. So it's not our fees.
Awesome. Thank you, sir. Is that answer your question? Awesome, thanks. Is it encouraging to buy your home paying outright cash if you have the cash in your account?
If you have cash in your hand, is it right? Is it proper to buy the house outright? Well, we're Nigerians. We came from a system that is a cash-based system. I will not encourage anybody to buy a house outright. There's something called OPM, other people's money. I strongly believe in that. You don't use your cash and let it sit. You use other people's money to do what you need to do.
Got it. And I'm going to answer that question as well, because if you have cash, for example, $100,000, and you can buy a $100,000 house, because real estate provides leverage, which means you put down little money and you get a lot in return. No other investment asset does that, right? In stocks, you have to pay 100% of the stocks. If you buy gold or silver or NFT, cryptocurrency, you have to pay 100% for what you get. But on the real estate side, you can put down 3%, 5%, 10%, and get own 100% of an asset. So if that is the case, if you have money sitting in the bank account and you are thinking, do I pay cash for this house? I don't want headache for mortgage, I don't want to stress out. I want you to think about wealth building, okay? Wealth building, which means you can divide the $100,000 into 5, $20,000 each. You can put $20,000 each on each investment property. Each property is increasing in value every single year. Each property, you can rent them out. Your tenant is paying down your mortgage. If you don't want to deal with tenant stress, say, no, I don't want to get call from tenant. Get a property management company to manage the property for you. You can put down 20% and control 100% of an asset. And by the time all those mortgages are paid off by your tenant, guess who now owns the property? You. This is a property you bought for $100,000. In 10 years, with about 5 to 8% appreciation every year, this property is now worth about $150,000 to $180,000. In about 30 years, when the property is paid off, it's now worth about $300,000. $300,000 times 5, how much is that? $1.5 million. And guess what you did? You only put down your down payment. Your tenant paid down the house for you. So if I were you, if you have cash, don't put cash on one property. Spread out your cash on multiple properties. We have mortgage professionals here, Mr. Daniel Misnike. They can have this conversation with you. The goal is to help you to build wealth through real estate. And I think with the benefits and leverages of real estate, it is definitely possible to buy multiple properties instead of one property. Okay? Thank you very much. Another question is, what is the payment expected to cough out at the end of every month for a house of about $250K, $400K? I told the person that asked the question, it's going to be a conversation with the mortgage broker, because they have to look at your credit, debt to income ratio, and all the other things to know what you qualify for. And we have a question here. Is it advisable to pay for your home between 10 to 15 years on a mortgage, or 15 years to 25 or 30 years? Essentially, like how much mortgage? Is it a 15-year mortgage or a 30-year mortgage?
Okay, so this is regarding term. So, of course, if you do a 10-year term, your payment is higher, which brings it to the income. So you must be able to qualify for the term that you're applying for. So a lot of people do 30 years because that's what they qualify for. But if you do qualify for the lesser terms, their interest rates are lower. So the lower the term, the lower the interest. Like 30, 25, 20, 15, and 10. 10 years will always give you the lowest interest rate. But what I'll tell you is you don't want to get stuck with the higher payment, because once that document is signed, you are now obligated to be paying that monthly minimum payment. That was just consider your minimum payment. It doesn't change. So I would encourage people, do the longer term. If you want to pay higher and let it apply towards your principal. But don't get stuck with the higher payment, because if you get case you lose your job, you're stuck with it. There's nothing you can do. And there's a big difference between a 10-year mortgage term compared to a 30-year mortgage term.
Awesome, thank you.
Sorry, there's a question on the line.
Oh, there's a question on Instagram Live. Can you say hi to Instagram Live? Can you say hi to Instagram?
Hi, Instagram.
Yeah, we got a question on Instagram saying, do you see housing market going back to what it used to be, or it has come to stay, considering the fact that interest rate is going up now?
Hello, Instagram. The market is here to stay. Nothing is changing. It is here to stay, and nothing is changing. California was like that before. New York was like that, but it's here to stay. It's not going to change.
So do you mean to tell us that the market is never coming down?
No, we will not say it will not come down, but it's going to take a long time. That's what we're using California and New York. They started off low and they're this high. As long as there's employment, people are working and able to pay their mortgages, there will always be a demand.
Say your tenants don't pay. Is it advisable to take government assistance, and does it have impact on you?
When you say government assistance, like what they call them, Section 8, right?
Yeah, because let's say, you know, you have tenants and then they lost their job, they can't pay, things like that.
So they have some tenants that have not been paying rent. And so the tenant applied for assistance from the government, and then the government is paying you. Is that what you're saying?
Yeah.
Yes, now take it.
But do you have to prove that at the end of the year?
Well, I think you will probably get a 1099 from the government.
They send it, I know what's the government. They send 1099.
Yeah, they send 1099 to you. So when they send, it's part of the rental income that you're going to declare on Schedule E. But if they don't reject any money.
So back to what you're saying. Anything above $600, I think it's $500, $600, you will be issued 1099. That's the law. That will be sending you 1099 at the end of the year. If you're taking cash out will be sending you 1099 at the end of the year.
Right. Can we give Mr. Daniel a round of applause, please? Mr. P, my main man, thank you, sir. We appreciate you. Mr. Keljo, thank you, I appreciate you. So we're going to do a raffle draw right now. We have gifts, so if we don't have time, or we have a lot of gifts and stuff, but anyway, let's, we have about maybe 15-20 minutes left, okay, so we can have lunch and we can get people out of there. We know people are busy. Thank you for taking time out. We appreciate you.
Okay, so for this, we're going to just give 2, and the last one would be the air fryer, so that you can stay together.
Alright, so to pick this raffle draw, I'm going to give Ms. Nikki Ojo, please pick one ticket here, just mix and mingle.
Alright, thank you so much, ma'am. So we're also giving back the knife, the Cuisinart knife, because the lady said my husband gave her as a gift already, so she wanted us to give it back up. Yeah, so the number we're picking for the cash gift is 866112. 8661. I'm sorry. He can't take it.
What are you going to do without that?
He can't take it. He's family.
He would rather write us a check.
I know, to give it away.
Once a millionaire, always a billionaire, so.
Alright then, so the next number for the cash gift is 866134. 866134.
Yes, sir. Please come to the front, sir. Congratulations. Let's give me a round of applause, please. You're bringing the cash gift. Cash. Straight into your pocket. Thanks for coming, sir. Thank you.
Alright, one more for the knife set. And then once we're done, the next 15 minutes, we're gonna give out the air fryer. Okay, so the next cash, oh no, not cash, the knife gift is 866147.
866147.
Check your tickets.
Yeah! My brother, Mr. Gabriel, please come to the front, please. I'm sure your wife will be very happy you came today.
And it was something,
You're bringing a whole nice set for the family. Thank you, sir.
Thank you so
really
much.
appreciate you. Thank you so much. Miss Carrie Adebo, can you give it up to my wife, please? Please help me thank God for the blessing to me. She makes me to do this. Let me flourish in God's given talent and ability. She supports my dream. I'm praying God will bless you, God will increase you. God make your dreams come true. I appreciate you. Thank you. All right, so this is Mr. Michael here. He's a credit repair expert. We know we have some questions about credit too, so we want to give him an opportunity. He's very knowledgeable. You know, that's how I met him. We met, how many years ago? About more than 2 years ago, we met and we started talking. He's a credit repair expert. So we want him to please answer some of our questions too and provide value to our people. And can you please give it up to Mr. His wife is here. Mr. Michael, thank you so much for coming. I appreciate you. Give it up for Mr. Michael.
Thank you very much, Mr. Bayo, for putting me on the spotlight. I also want to thank all the speakers that have actually come before me. And I want to appreciate my wife for actually coming here to attend this event with me. If you actually have any question on credit repair based on what Mr. Dimeji have actually presented, you could probably throw in your question and I'll probably throw light on it.
Got it. So we have a few questions here. And Mr. Michael, just on the go, you are a credit repair expert. You see people struggle with their credit. What advice can you give people concerning their credit?
Okay, the first thing you need to do is to know your credit score and your credit data, which is very, very important. Most of the time we just go out blindly to go, oh, I need the house. So the mortgage lender will probably tell you what's your credit score. Oh, I don't know. Then you want to go check Credit Karma. Credit Karma is a free tool for checking your credit score, but it doesn't give you the accurate credit score. It's actually free, and you know anything that is free is not better than the best. So there are actually a lot of companies out there that actually going to give you a credit score accurately. Credit Karma will give you 2 credit score from 2 credit periods. But you could actually get the true credit score. You can get it from Smart Credit, Identity, IQ. And also you have to know that there are 2 scoring models to credit score. We have the Vantage credit score and we have the FICO credit score. And the Vantage credit score is actually for consumers like us, while the FICO credit score is actually for lenders. So your lender will not check your Vantage credit score. Your Vantage credit score will have a higher credit score, while your FICO has a lower credit score, and that is what you actually want to go with. So, but in order for you to actually determine what your real credit score is, because we have 3 credit scores. We have the Equifax, TransUnion, and the Experian. You have to check all these 3s and see the ones that actually fall at the middle. That will actually give you a kind of projection of what your FICO credit score should be. So that's the first thing you need to do. Check your credit scores and pay for it.
Got it.
Which is actually worth it.
Got it. Thank you very much, sir. We have a question here. Mr. Dimeji mentioned credit utilization, 30% or less. Can you explain why that is important?
Okay, your credit utilization actually shows whether you are a chronic debtor or not. If you have a credit limit of $1,000 on the card and you max it out to $1,000, you spend everything, and now you pay it gradually, that shows that you don't have the financial capability to actually pay more than $1,000. So, but if your credit utilization is below 25%, most of the time I actually advise 8%. That's when your credit score will actually, reflect an upper trend. So if your credit utilization is below 30 or 25%, this will not bring down your credit score, right? So, but if you actually have something above that, that's the same way it goes with mortgage. They want to check your debt to income ratio. If you are above 40-something%, you will not be qualified, right? The same thing with your credit.
Got it. Thank you very much, sir. Thank you. Another question we have here is, if you have a total credit limit of $10,000 and 2 credit cards of $5,000 each, which is better, 30% or less on the $10,000 or 30% or less on the $5,000, or is it the same thing?
No, having 2 credit cards or 2 credit, actually helps you more than having just one. A credit mix actually contains 10% of the credit score. So if I have a student loan, I have a mortgage, I have an auto loan, I have credit cards, it actually helps me more than somebody who only has only one loan source. You understand what I'm saying? That's actually 10% of your total credit score. So if you have 5,000 here, 5,000 here, and your credit utilization is below 30%, and you have 10,000 here, and you have 30% lower utilization, with me having 2 of that, I'm actually more qualified than just you having only one credit.
Got it. Thank you very much, sir. So in essence, the more accounts you have on your credit reporting, the better it is for you. That doesn't mean you have to go and buy things you don't need. Like a new couch that you, what is it called? All these furniture, so gallery furniture, $10,000 couch because I want to build my credit. You don't need that. You can buy something even as low as $200 that you need, put it on your credit and pay $10 a month, and it's reporting. It's good for you than saying, you know what, let me go and buy a Mercedes-Benz or a BM so that I can have credit, something good on my credit. That will put you in a lot of trouble. You don't want to do that. So please, we want people to be credit conscious and know that credit is very, very important. But we don't want to put you in debt, because the debts that we want to put you in are good debts. They are good debts. Good debt in real estate. One day, I logged into my one of my accounts. My wife saw debt, mortgage loan debt on my listing. On, I think it was Capital One, or she was scared. $1 million money is good. I want to owe $100 million in good debt. I'm not there now, but I want you to think of it the same way. You can have a Mercedes-Benz, BMW, Gucci bag, Louis Vuitton, and nice things of life, which are very, very good things. I love them too and I wear them. But what is most important is this. We have to have a consciousness about the future that we want to create. When I was working as a registered nurse and then a nurse practitioner, because that's my background. Any healthcare professional here? All right. So I'm a psychiatric nurse practitioner. That's my background and I love it. I will see people 60, 70-year-old still coming to work in the hospital, and that breaks my heart. These are people that are old enough, they are my mothers, they are my grandmothers, but they cannot stop working simply because they have a lot of bills and they didn't buy assets to pay for those bills. So one day I was driving and I saw some white guys playing golf on a Monday morning on the side of the road. I said, me, we are going to work to go and hustle. These ones are playing golf. What do they know that I don't know? I'm very inquisitive when I see things like that. I pulled over, I went to talk to them. These were young guys. They said, we own real estate. I just got to America 2014. I said, real estate, okay, that makes sense. So I kept it on my left hand, that I would not use it to eat. That when I get to a position, I will own real estate. So the kind of debt you want to get into, let it be good debt. Get into real estate debt. But don't get into real estate debt blindly. You have to be educative about the process. That's why we brought in professionals today. Miss Nikki Ojo, she owns a bunch of rental properties. Every day she's buying a rental property. I don't know how she gets the money. Every single day, my son has bought this. I said, God, help me too. Let me get there. She's here. She will teach you what she knows. How she was able to buy 1, 2, 3, 5, 10 properties. We will give you our contact. You will talk to her. Mr. Daniel is here. He has bought a bunch of rental properties. We have a few too. We do Airbnb and all these kind of things. We want to teach you what you know. This is not like you have to buy a house. Whether you do it or not, God's blessings are forever. But we want to help you and family to say, can we get into good debt? I have a Mercedes parked outside. That's amazing. But I also have 5 rental properties. Anybody with me? Yep. I have a BMW parked outside, but I'm planning to buy an apartment building. I told my wife, we're going to dream big or go home. We're buying an apartment building. Amen. Do we have the money yet? No. Are we working every single day to raise the money to put our family in a better position? Yes, we are. And we are going to buy an apartment building. Alright, my brother here, are we going to buy an apartment building or not? You know we are. Yes, sir. Because we talk owning apartment buildings and we are renting the apartment and living there? Do they have two heads? So what is wrong with us? We have to be serious and say, I don't care what my position is right now. I don't care what my credit score is. I'm going to do whatever it takes. Fix my credit. Stop eating out. Fancy restaurants in the gallery and all the rest. If you don't have the money right now, there was a time I cut off cable in our house, and I still don't have cable. That money that I was supposed to spend on cable, we give it out every single month to St. Jude Medical Center for cancer research. So you can actually limit your expenses and saying, let me put my family in a position where we can buy a house today for $300,000. In 5 years' time, the house is worth $500,000 to $600,000. When you sell that house, will you give the money to me? Will you give it to me, Sneaker? It's your money. It's for you and your family. There was a property a friend of mine bought for $310 in 2017. Guess how much the property is worth today? $450. His loan is $250. He's gonna sell it. I'm his agent. To God be the glory. Guess how much he's cashing out? $200,000.
And how much are you making out of that?
How much am I making out of that? Zero. So please.
Seriously, we have to change our mindset as a society. Because a lot of times when we talk to people about buying properties, the first thing that comes to their mind is, oh, they just want to make their commission. How many times are we going to make commission? It's just for you. The first house my son bought when he was 21, that house was $77,000. He bought it, and now the house is about he's almost paid off. His mortgage payment is $650, and we rented it out for $1,400 a month. So he pays $1,000 to the lender, and instead of 30-year mortgage, he's going to pay it off in 9 years. That house today. Okay, he's 27 now. Okay, we bought it like 6 years ago. Now, that house is worth $180,000. Is he going to give me the money? No, he's not. Even though he's my son. So if we encourage you to buy, it's not because we want to make money out of it or anything like that. Of course, if we get paid because it's what we work for, but it's just for you to have that financial, financial independence. That's the reason why this event is put together to empower you so that you can go out there and be very upset at where you are right now and say, yes, I'm going to take that next step. Yes, I'm going to stop buying nonsense. Yes, I'm going to save my money. Yes, I'm going to buy real estate. Yes, I'm going to cover it. Let's go.
Thank you very much, man. Thank you very much, man. Mr. Michael, while you are still here, somebody has a question, please.
Okay, so you plan to buy a house, right?
Yes.
And I know Texas law, they have a community property, yes, you and your spouse.
Mm-hmm.
So now you're trying to buy a house, your credit, you worked on it, it's fine, but your spouse credit is not good. How do you work on that?
Okay, when you combine those two credit together, it will probably lower or probably increase your interest rates. So for me, I think it's not just, it's just an advice. Go with one person. If it's your wife, go with one. If it's your wife, let your wife, put everything on it. If it's your husband, do the same thing.
But don't they check?
Okay, let me tell you one thing. When you are married, you are married. Even if your name or her name actually appears on the loan, it's both of you. If anything happens, tomorrow you want to separate, it's going to come up. So, but for you to actually get that property, it's actually with a very good interest rate. Go with one person. The other person, put that stuff on their name, on his name or her name, whatever. So that's the best thing. But if both of you actually have a good credit score, it's actually much more preferable than one person or single person having one good credit score. The interest rate is always more.
All right. Thank you very much. We have a question right here too in the front. We are rounding up now, so people can actually grab some food.
Question for my brothers. We keep talking about low credits.
Yeah.
So what are basically
The
mortgage or the credit experts will be the one to answer. I have a scenario. For instance, I need to close on my house this month, and I'm renting, right? Then, if I want to move out and the apartment is giving me an issue, would that reflect on my credit, or what do I need to do? Because my lease is ending at the end of the year, right? So what do I need to do? And I already have my key to my house. Is there an implication for that?
What kind of issue are they giving you?
Say that again.
What kind of issue are they giving you?
You're trying to break a lease. I'm trying to break a lease.
Okay, so most apartments, they actually have a fee that you need to pay to break that lease. So if you don't pay that lease, they will report on your credit, and it's probably going to come under eviction. You understand what I'm saying? So, but some people don't care because they feel like, after all, I got a house, and I don't want it again. But you know, sometimes, maybe you're probably going to need it, and that's going to stay on your credit for like 7 to 10 years. So you need to, it's either you pay it off, or you start working with a credit repair company. But the best thing for you to do is pay it off so they don't report that stuff on your credit report.
Thank you, sir. And one thing I did before I got an apartment for somebody, they broke the lease, I was able to work out a payment plan. So I called them and I said, they took me to collection, but before the collection reported, they contacted me. I said, see, I'm just starting nursing school, there's no money. Let's do $50 a month. He said, oh, how can you say that? We want you to pay $5,000 today. I said, me. But he said, hey, will you pay $5,000 today? Where is the money? So we did $50 a day, and I upgraded to $100. And God will have it. God did something in a year. I just wrote them a check. To God be the glory. So you can do a payment plan with them and say, you know what, I don't have the cash right now. I don't want you guys to spoil my credit or report it to my credit. Let's work something out. Give me a payment plan. I'll pay $100 a month or whatever, you know, $50, $200 a month as you are comfortable till you pay it off. That's my suggestion. Thank you, man. All right, we have a question here.
So.